guys? It's Migs with Market Open. I wanted to go ahead and do the Monday mentorship session. I had a question in the Facebook group about exits, actually, but before I answer that, I think I'm going to do a separate lesson for that overall, but before I start doing exits, actually, I kind of wanted to back it up a little bit and start on entries. So different things that you're going to need, obviously, to be able to day trade, swing trade, invest, or whatever. You're going to need an entry, an exit. Well, it could either be a partial or a complete exit where you take all of your shares, and you also are going to need a stop. So today's lesson is actually going to be on entries. Now, I was thinking, what are some of the things that you're going to need for these entries to kind of work out? So it really all depends on what you're trying to accomplish. So obviously an entry for a swing trade would be a little bit different than if you're investing or if you're a day trader. So I'm mostly going to concentrate this lesson on day trade entries. We can do a separate lesson on swing trade entries and what kind of things you're looking for. But relatively, they're very similar because you're looking for some sort of pattern, some sort of dip, something to play out a certain way. You need A, B, C, and D to happen for it to deserve your money and you actually putting some risk on and buying some shares or shorting shares at a certain price. So with that being said, I'm going to walk you guys through typically what I do in the mornings. So I look for momentum stocks with that have high volume, have a lot of shares being traded in the morning, either on the long side or on the short side. I typically, in the morning, like right at the market open, I typically like to short stocks because I think that fear is a little bit greater than greed, and stocks tend to tank a lot faster than they go up. Because just like that saying goes, it's bulls take the stairs, bears take the window, meaning that a strong stock that is going up, it typically goes up, it goes up, sideways, up, sideways, up, sideways, and it's kind of like a stair set, it just keeps going. But whenever people start getting fearful of a certain situation, for instance, the American airline, when that guy got punched in the face, when Chipotle got sued and they had like that salmonella breakout or something like that, something in their food, bad earnings and things like that, when people typically have a fear that they're going to lose a lot of money, they just completely dump their shares, and it's followed by massive red candles and huge sell-offs. So with that being said, so I look for stocks that are either gapping up or down. Let's just take Facebook, for instance, this morning. So Facebook had some sort of negative news. I think they're changing something in the policy, or they're getting in trouble for something political. Honestly, I didn't even really read into it. I just know that it's a negative catalyst and it's headed down, because I typically don't try to guess on what's happening. So what I'm looking for typically is some sort of failure. Basically the stock just giving up and not wanting to go any higher. So this one is typically a little bit harder, a little bit more advanced, because you're looking for more of a failure in the tape, in the action of what's happening. It's not necessarily a specific pattern, because the patterns are kind of differ every single day on the short side. So Facebook, for instance, this morning, it opened up here, it sold off, it got bought up, next candle sold off, got bought up. Then the 9 and VWAP kind of started curling down, and then that's kind of when I initially should have shorted. I actually ended up shorting it, actually that's right, this is the 5-minute chart. Yeah, so I actually ended up shorting it over here, right above the 176 mark. So with this, I noticed that it was just kind of heading lower, and lower, and it wasn't really coming back. But like I said, this one's a little bit harder to kind of visualize, so I'm going to show you guys something a little bit easier that I do have some shots of over the past couple of months. So instead of doing shorts, we'll try to keep it simple a little bit and do a little bit simpler patterns. So let's see here. Okay, so for a little bit simpler example, I have a bull flag here on AAOI. So what a bull flag is initially a strong upside move with a green candle and then a smaller volume pullback to a moving average. So the white line here being the VWAP, so volume weighted average price. If you guys don't know what VWAP is, I have a video about it if you guys want to search through. Actually, I think it's like down here. Search through on throughout the videos and just type in VWAP. There'll be a video that'll pop up. So you're basically just pulling back to a moving average. The next candle to make a new high would be your entry. So AAOI was gapping up that morning, and I expected it to head a little bit higher. So we had that initial up move and then pull back to a moving average, and all that I'm looking for is for a pattern to form. Some sort of pattern that I've recognized that that it's basically a universal type thing. So these patterns that happen kind of signify the momentum and which way the market is going, and all it really signifies is that it's people are taking a little bit of profit, and then if as soon as the next candle starts making a new high, that means the buyers are starting to come in. And so what you would need for it to for that to back up itself is the volume. So volume is actually down here. So as you can see, there's a lot of buyers here in these green candles, and when it starts actually pulling back into the the moving average here, you can see that it's actually lower volume. So that means that people are not strongly selling off, as in like they're fearful for their money. As people are taking profits because they either have been into the stock since it gapped up, or they're taking profits from this initial move. So then whenever the volume starts coming in here, it's the very next candle that makes a new high. You can see the volume actually starts getting bigger and bigger, which means the volume is starting to go up and the momentum is actually starting to go up. So like I said, all I'm looking for is a specific pattern that I recognize. Now, the stop here on AAOI would be the bottom of this candle, since that's the candle that I'm basing my entry and my risk off of. So it would be $41 here. Let's just say that this is $41.15, and then so I buy like 750 shares or so because I'm risking 15 cents, and then either try and get 2 to 1, or sell off as it starts heading back up. Either one. Now another pattern. Let's see here. Here is, there we go. So here's a VWAP bounce, volume weighted average price. I also talked about the VWAP, what it signifies in stocks, and how it's used. So I'm not going to get into too much of the details. I was just showing you guys another pattern that I like to trade. So typically a lot of the times the price action will stick around the volume weighted average price because it is the median price for the stock during that day. So a lot of the times there will be people that want to buy the price or buy that stock during the average price. So there will be a lot of buyers actually sitting there at VWAP waiting for the price to come down because they don't want to buy it up here. Why would they want to buy higher than what the average person is purchasing the stock for? So what they wait for is for the pullback back down to VWAP. They buy it at an average price and they just sit there and hold it basically. So that is something that I typically like to take advantage of. This is one of my go-to patterns as well. It's called a VWAP bounce. So I'm waiting for some sort of consolidation here, and next candle to make a new high, which would be this candle, is typically where I get in, and then my stop would be the bottom of this candle. So I also signified it here on the 1 minute chart. So this is kind of the consolidation. I get in as it breaks through VWAP, and I just go ahead and hold it, either 2 to 1 or sell off as it goes up. Let's see if there's any more on here. Oh, actually, you know what? I have a failed bull flag. So obviously it doesn't always work. So bull flags don't always work. It's like a 60, 70 or so % chance, really depending a lot on what the market is doing, whether the pattern is going to play out and work or not. So this is one of those instances where the stock was gapping up, EL, and it pulled a perfect bull flag. So up, it pulled back on lower volume, as you can see on here. So the volume kind of dies down when it's pulling back, and it went up. But now during this time, the SPY, I remember this very clearly. The SPY actually ended up turning around, and the pattern didn't really quite play out. So typically, I would sell it somewhere towards high of day, and sell it as I go, or just kind of hold it all until we hit high of day and then just start piecing it off. So not all the time does this work, but you have higher odds of something like this working. So remember, what you're looking for is high volume. Typically, I'm looking for stocks in the morning that are gapping up with over 50,000 shares of volume, either on the upside or on the downside. Either they're selling off, they have to have some sort of catalyst from the day of or from the day before. Either that, or it could be a continuation play. But the most important thing behind it when you're trying to find an entry is that you need the high volume. Now, the high volume itself is just the amount of shares that are being traded back and forth, bought and sold. So if you have high volume, that means that you have a lot of eyes behind the stock. And when patterns, especially universal patterns, which are the ones that I'm talking about, that a lot of people know, a lot of professionals use, means that whenever this pattern plays out and people see it, they will jump into it with you. A lot of people, for some reason, they just don't believe in technical analysis, but there's a lot of people that make a living off of this sort of thing. There's people out there that trade fundamentals and they just kind of buy things whenever they're cheap, but they plan on holding it for a very long time. But us as day traders don't really plan on holding it for longer than the day span. So we'll get rid of the shares within this same day. So typically what people will do is find a pattern to be able to get into. So we use that to base our entry and our risk off of. Let's see. Oh, okay. I'll show you guys one more. This is a little bit more of a flat top breakout, although this kind of overwent the 20 mark. So RYB was actually gapping up as well. Right at the very beginning, in the first 5-minute candle, it actually sold off a little bit right to the 1960. Now, with 1960 holding for, let's see here, 15 minutes, and then the buyers actually starting to come in, this is something that you have to visually see it holding, it having some sort of resistance at a certain point. Maybe it's a whole number, maybe it's a specific point where there is a large seller and you need to be able to overcome that. So with a flat top type of breakout, you would need for it to hit a certain point. So as you can see on here, it keeps hitting right below 20. So this is probably what, like 1995 or something. Now my initial entry for this was actually over the $20 mark, and I based it off of 1960 risk. So I was risking about 40 cents. I went long 250 shares because I'm risking about $100. Now if you see on here that there were a lot of eyes on this. Why, you say? I'll give you guys a second to think about it. What do you think it is? Okay, now if you said that obviously this candle is very green, yes, but that's not exactly the answer I was looking for. So what I'm looking for is the volume that's coming in behind it. Remember that these patterns need a lot of eyes behind it for them to see it and people to actually join you in the trade. So if you notice on here, when it breaks this $20 mark, the volume actually starts coming in and people start buying it up. So the volume grows. This is probably over 500,000 shares traded just in this one candle alone and within this 5-minute mark. So obviously the mob is behind you on this, and they all saw that it kept hitting its head right below the $20 mark. Also, there is another perfect little pattern on here. Right here, this bull flag. So up, pulls back on lower volume, and it just starts ripping back up. So those are some of my go-to patterns. I have a lot of other stuff that I do, but this this little lesson is not really about the patterns specifically, because I have probably right under 10 patterns that I like to do. There's probably a handful that I do every single day. They're my go-to things. They're very universal, but they have like specific criteria that need to be met for me to get into these stocks. But so let's do a little bit of a rewind here. So you're looking for a stock to be gapping up or gapping down. You're looking for a certain point of resistance. So either it could be like a flat top, it could be a bull flag when it pulls back and you buy it during the dip. And I guess we will talk about next time on where to set your stop, and then ultimately where you should start selling to be able to maximize your profit potential. So hopefully that helps you guys out. If you guys have any questions, make sure to put it down in the comment section below. Also, if you guys are new to the channel, make sure that you guys subscribe. Smash that subscribe button, and you guys will be able to get updated on the next time I put out new content. I also do recaps every single day that I trade. And then if you guys have not joined our Facebook group, make sure to do that. It will be down in the description below. And as always, I will talk to you guys next time. Bye.